that you don't give the customer what they're asking for. You give them an amazing product. You reinvent the wheel. You create the future. Everyone knows now China, 50% of the vehicles now are new energy vehicles already. That happened last year. But who are they asking? Go back to 2016, 17, 18, all the incumbents. When they talk to their shareholders and says, we have to retool the entire way we make vehicles, all this infrastructure that we have built to date, it doesn't work. We recall what Hemingway said a long time ago, how'd you go bankrupt? Well, in the beginning, it was very gradual. In the end, it happened suddenly.
Our next guest warns that the auto industry is at a pivot point. The future is here, and those that make it will be the next Apple. Those that don't will be the next BlackBerry. We're going to find out who's who and what the future of energy looks like for the automotive industry and what investors can do to position themselves for this growth and this trend. Gianni Kovacevic joins us today. He is an author and investor and the author of the book, My Electrician Drives a Porsche: Investing in the Rise of the New Spending Class. Gianni, welcome back to the show. Good to see you again. It's been a while.
Thank you, David. And it's good timing with the big announcement from Ford Motor Company, big write-down, $19.5 billion. They look at the future of the automobile a little bit different than maybe some other people in the world. So it's time to take stock and maybe look at something. What's this going to look like in 2026 and 2027? And what's what we're going to talk about today.
I love cars. I'm a car guy, but I'm also an economics guy. And so this is a great topic for me personally, because I want to find out what the future of automobiles is going to look like, Gianni. A lot of companies are pulling the plug on their EV-only projects. A lot of German companies are. We'll talk about the German companies in just a minute, because there's a big problem over there in Europe, because Brussels wants one thing and the Germans want another. But let's talk about Ford first, since you brought it up. They pulled the plug on their electric F-150 pickup truck. Didn't sell well. They lost billions of dollars just on this one car. I'll find the exact number in just a minute. But they are going back to an all-gas version of the F-150. They're scrapping this, but this comes to a broader point as to why a lot of companies are scrapping their EV-only projects. I mean, yes, they're losing money, but the ultimate question is why?
Well, we got to set this up. This is a data point, and or noise, as some people say. But when you look at all these data points, you have to look at it. You have to look at the music, the overall, what's actually going on in its entirety. I have watched Jim Fairley's interviews with CNBC and Bloomberg. This is the CEO of Ford Motor Company, of course, and he's talking about, and please, I reference people to go look at this. On my Twitter page, I actually put a link to it. He talks about, we're giving the customer what they want. We're giving the customer what they want over and over. It's a changing dynamic. We've got of course, the new administration in the United States. But why is that a mistake? Steve Jobs famously gave an answer when people says, why did you make the iPhone? And he says, most people will tell you, give the customer what they want. That's not my job. I'm paraphrasing, of course. He says, we need to come up with products the customer doesn't even know they need or want. And that was the iPhone. He went on later and referenced Henry Ford. This is so ironic. And Henry Ford, when he was asked, if I asked people what they want, they would say, give me a faster horse. And so when you look at that, I think this is truly, and I hate to say this, a BlackBerry moment for the Ford Motor Company. They simply did not make the products that people wanted to buy. And there's a deeper answer here, but they effectively took the old architecture or old infrastructure and tried to make an electric vehicle out of it. People that bought the Ford Lightning actually love it. A friend of mine who's probably going to watch this interview owns one, loves it. He says it's the best vehicle he ever bought, actually. He just adores this thing. But it didn't work. There was no customer take-up, and because of that, they're capitulating.
So look at these numbers here. I just pulled them up. They're losing. Ford is writing off $19.5 billion, killing several electric vehicle models. When the market really changed over the last couple of months, that was really the impetus for us to make the call. Ford CEO Jim Farley told Reuters what happened in the last couple of months. And also, take a look at this. Trump pulled a 180 on EV policy. They stripped away the $7,500 tax credit that had made some EVs more affordable. So, two questions. First, on what the Ford CEO said, what happened in the last couple of months that maybe pushed the winds of demand in the opposite direction, away from EVs? Was it just really the last couple of months, or was it a slow couple of years trend?
No, okay, yes, of course they took away the credit, and they've basically took away this the emission standards, or that they had to actually be EVs. Europe also has some kind of a silly mandate where by 2035 all cars have to be electric. Not going to happen, so don't worry about that. But it's a longer and deeper sort of capitulation or failure, and we have to set this up. So we have to go back like basically 10 years, where we saw the no one thought that the take-up would be so fast. And everyone remembers Tesla had tremendous short selling pressure in 2019 and 2020. And when these companies were deciding what to do, the Biden would come and he'd become president, and he would have his 4-year sort of presidency. But the actual foundation of this, when you looked at the incumbent automotive industry, and you're talking about basically it was the European car manufacturers and the American car manufacturers in Japan. It wasn't China. So now in 2024, who are the biggest vehicle manufacturers in the world? China, 31 million vehicles. Okay. Then you have America, about 11 million. You have Japan at 8 million. Then you have India around 6 million. But then you have Mexico, Germany, South Korea, each at about 4 million. The point I'm trying to illustrate to you, if you combine America, Japan, Mexico, Germany, and South Korea, collectively, David, that's the size of the Chinese car market. Yeah. So who are you going to follow? You need to follow China. And it was the single biggest customer for Mercedes, BMW, General Motors, number 2 for Ford, was China. And China told them, you have to make electric vehicles here. Or if you make 100% electric vehicle, it doesn't have to be one of the old 50-50 partnership. So when Tesla went into China in 2019, it was 100% owned. It was the first time they allowed that, but it had to be 100% electric vehicle. More importantly, they did it in 12 months. So the pressure that they had at the beginning, first, they never thought the take-up would happen so fast. As everyone knows now, China, 50% of the vehicles now are new energy vehicles already. That happened last year. But who are they asking? Go back to 2016, 17, 18, all the incumbents. When they talk to their shareholders and says, we have to retool the entire way we make vehicles, all this infrastructure that we have built to date, it doesn't work. We have to retool that. They said they're not interested. And then when you look at the unions understood that it was 50% fewer man hours to make these electric vehicles. And when they talked to their dealer network, the dealer network said, excuse me, we don't make money really selling cars. We make money servicing cars. The electric vehicle has far fewer servicing points. There was no buy-in basically from the incumbent network, the infrastructure there. And that's why they were laggards. And that's why they're in the problem that they are in today.
You already know why people hold gold. It's because it's real money. But what if your gold could do more than just sit in a vault? Well, that's where our sponsor today, Monetary Metals, comes in. They offer a way for you to earn a yield on your gold paid in physical gold. Through their leasing marketplace, you can earn up to 4% yield per year in gold. Instead of paying storage fees, your gold actually works for you. And because that yield is paid in gold, not cash, your stack grows no matter what the dollar is doing. Thousands of clients already earn monthly interest in gold and silver through Monetary Metals, and the numbers just keep climbing. So don't just hold gold, start earning real gold on your gold today. Go to monetary-metals.com/Lynn, link down below, or scan the QR code here. Put your gold to work soon. Look at this. Okay, let's just illustrate your point. US EV sales are on track for their first year-over-year drop since 2019. EV sales will fall by 2.1% in 2025. This was dated a couple of days ago. By comparison, in China, as you mentioned, the world's largest EV player, 48% of passenger vehicles sold in 2024 were EV. Totaling 11 million. That's higher than the 6 million EVs sold in the rest of the world combined, like you said. Why is it that there's a huge disparity between interest in EVs in China and the US? Besides the infrastructure problem, is there an issue with the quality of the cars? Is it pricing? All of the above, other things?
No, David, when you look at this, the customer has spoken. And what they're buying, anyone that buys an EV is not buying an EV because it has no emissions. They're buying the technology. They're buying the future. They're buying convenience and comfort. Not everyone is for an EV. If you live in rural Wyoming, probably not the best vehicle for you. You should stick to the vehicle you have. But if you live in an urban center and you drive 50, 60, 70 miles or 100 kilometers a day, they've already spoken. They're buying these vehicles because it's the future. They're technologically advanced. Just look at any type of documentary on where they come from. The big Chinese companies, okay, you have BYD, you have CATL, but if you look at Xiaomi or Huawei, they were telephone companies. They were making handsets. They basically interconnected mattresses, toothbrushes, appliances, furniture. And when the first go around of tariffs hit on Trump 1.0, that's when they started to pivot and started to say, we need to have a broader offering. And they started to make these vehicles. But more importantly, they did it so fast. This happened in the last 5 years. And so when you look at the offering, we don't have that yet in North America because of the punitive tariffs. But whether it comes or not, that's not the point. You and I are speculators in the things that make these things possible. So I look at how much lithium in aggregate is being used. I don't look at the headline issue that EV sales are not doing as well in the United States. How much lithium globally is being used?
Yeah.
How many batteries are being made globally? And in turn, how much lithium or phosphate is going into these LFP batteries? That's what interests me. And most people have to look at it from that perspective. It's in the beginning, it was partially because of charging, bad experience, unless it was done correctly by the companies that made it cool and made it convenient. The second thing is the product. If we had the offering that was offered in Asia, I don't believe you would have quite the same misery or lack of customer take-up. And by the way, the cost, these people are making vehicles in China for 30 or 40,000 equivalent US dollars, a very high quality, very modern, and has an unbelievable amount of technology within it.
What would happen, theoretically speaking, if, let's say, the Trump administration removed tariffs on Chinese cars, and so we could buy all these cars in America?
That's not going to happen. But if the Chinese car companies, and there's probably 20 major ones, but they're the 5 or 6 that people are familiar with. In Croatia, they're there. There's I can't even pronounce the names of some of these cars.
Sure.
But what they might want to do, David, in 20 of the largest U.S. cities is create, how like Fisker and Tesla had in a shopping center, they'd have a tiny little shop with 1 or 2 cars. They should be showcasing that to people and let the customer decide. You are not going to see a relief of tariffs, not in Canada, not in the United States. Europe, maybe, because what the Chinese are doing there is they're flipping the script. Remember when BMW, Mercedes, Volkswagen was the original coming into China? They were scared, about the IP. And they were thinking they had to do these 50-50 partnerships. These factories that they built there were never 100% owned by the incumbents. It was always a 50-50. Even now, General Motors has their brand, but through Chinese companies. And Buick is actually a very successful EV in China. But now for the Europeans to actually succeed, they are going to require the expertise and the wherewithal, the technology, the battery capability, the battery backup systems of the Chinese companies. And it's the Chinese now that are worried about the IP in Europe. So I believe Europe would be the first ones. They are going to create these partnerships. There's a big pressure point, as you already stated, from Brussels. They've told society and industry, which is going to get pushed back now, that cars predominantly have to be new energy vehicles. They are not going to be able to achieve that without the assistance of the Chinese. But the write-downs will continue because of the failed decisions of 6, 7, 8 years ago. They did not retool the way they make cars, and now it's going to be the very painful fallout from that. Just
to illustrate your point further, on Brussels and Europe, Mercedes profits, I just looked up 2024 net profit down 28% in 2024, landing around 10 billion euros, contracting about 11 billion in revenue. The EV sales of that particular company dropped 14% in Q1 2024. So EV sales are on a decline in Europe, while at the same time, like you said, emission standards from Brussels are getting tighter from CO2 emission standards. And so more BEV cars are going to be expected to be sold. But at the same time, it doesn't look like customers want them. So if you were an executive at any of these German auto manufacturers, what would you do?
Well, I disagree. The customers do want them. You have to look at the world's biggest markets. They're not buying these vehicles because they don't have the offering, David. there are punitive tariffs on these vehicles.
Ah,
So what they're left with is something like the Jaguar I-Pace and like all the, they're just ridiculous electric vehicles.
right.
They're not built from the ground up.
Let me rephrase. The customer doesn't want what the Europeans and the Americans are offering because sales are down. So,
Correct. What's on offer. And
right.
so in globally, in aggregate, sales are climbing. So one of a few things are going to happen. First of all, we do have an election cycle in the United States. So there will be an election in 2028. We'll see what happens. And the ultimately the car companies are going to have to decide. So Jim Fairley and Ford have made their bet. Let us see where the rest of the people fall out. I recall, and it's going to take a maverick type decision. And I'm not the first person that's stating this, that you don't give the customer what they're asking for. You give them an amazing product. You reinvent the wheel. You create the future, and you create this amazing product that they're going to want to buy in the future. But you have to start from the ground up. The way they build a car has to be changed. And when Tesla went into Shanghai, that was the second factory they built. And I'm not here to promote Tesla. I'm just giving you the facts. I'm telling you what happened. When they bought the Fremont factory in California, they were making cars there and had the capability to do about 500,000 vehicles a year. And the capex there, even though they bought that from Toyota, was about $15,000 per ability to make a car in that factory. When they went to Shanghai, David, first of all, they did it in 12 months. Groundbreaking. They started in January 2019. 12 months later, they were producing cars. They were able to do it for less than $5,000 capex per car that you could build in that factory. The floor space is far smaller. You need far fewer products. You need fewer employees. That's the kind of thing that I'm talking about. Volkswagen closed their first automotive plant ever. They did it earlier this year in Dresden. Now they're retooling that to make batteries for backup battery systems and different things, calling it a technology center. Ironically, the same thing Ford is doing. Their big battery plant that they've done, they're going to retool that. They're still going to make batteries. They're going to use the same amount of lithium, same amount of phosphate, but the batteries are going to go into backup battery systems because everyone has seen what's going on in AI and the fact that the power can be done with renewables, but it has to be augmented with batteries. Millions and millions and billions of these batteries are going to continue to be built. So it's until that retooling takes place, it's not going to change. They're either going to have to do partnerships with companies that know how to do these things, Tesla and the others, or they're going to have to retool, have that painful process. And they're not going to do that, of course, because we'll see where the other 6 or 7 CEOs where they fall out. And by the way, let's see if Jim Fairley is still the CEO of Ford 12 months from now, 24 months from now. I don't believe he's a maverick. And to give you one more interesting story, when Sergio Marconi came in to take on Fiat Chrysler, and he basically saved the company. And they brought him in. Imagine this: he comes to their headquarters in Michigan, and they show him the corner suite. The pinnacle office in the whole company with Chrysler Fiat. And he says, "Where are the engineers?" They're over there in the other complex. I'm in the wrong building, he said. I need to be over there next to them. We're trying to fix a company here. We're trying to change the world. This is the kind of mentality that it's going to take. And so don't argue with the customer, but you also have to, as Steve Jobs would say, give them an amazing product that they don't even know they need it yet.
Trump is rolling back a lot of the emission standards set forth by the previous administration. So just a couple of weeks ago, they proposed a significant rollback on fuel economy standards finalized by former President Joe Biden. The National Highway Traffic Safety Administration is expected to propose significantly reducing the fuel economy requirements for 2022 to 2031 model vehicle years. What happens to the future of cars in the U.S. under this administration? What are they preparing for, Gianni?
They continue to innovate because the CEOs that run these companies are, as I believe, they have to keep moving the chains forward. They have to keep making modern vehicles, new energy vehicles, energy efficient vehicles. It's also the election cycle. You're not going to have the same policies 4, 8, 12 years from now. It's also a global market. We already went through where the cars are made in this world and where the customers are. If the American car companies want to be selling to people outside the United States, they have to make technologically advanced products. They're not going to be able to stand still. To fortify this point, when they came into the Trump 2.0 administration, they're talking about drill, baby, drill. We want to have low oil prices. We're going to be drilling. We're going to lower basically standards. But you have to be able to turn a profit, David. drill, baby, drill. All the oil executives in the oil patch of the United States just looked at each other and says, yeah, but we're turning dollars here. The oil price today, by the way, is $59. Like, where's the incentive to drill, baby, drill? There has to be a business in there. So just because you remove some of these barriers, I believe, they only make 11 million cars in the United States. It's a 90 million unit market around the world. So they're making it. They're making these cars for other markets. They have to keep up. They will keep up. And I believe that was a mistake that Ford made. We'll see what happens in the future. But everyone is still going towards the future. And the future are new energy vehicles, in my opinion.
Okay, well, I want to talk about new energy vehicles in just a minute. So this is from Kalshi, prediction market, EV market share in 2030. So currently, I believe it's anywhere between 20 to 30%. 20 or 25%, correct me if I'm wrong, but I think those are the numbers for the global EV market share right now as we speak today. Prediction markets are predicting above 10% is 93%, well, we're already there. Above 20%, 73%. Above 30%, 50% of the traders on this particular prediction think it's going to be above 30. What's your prediction?
Well, I would say different markets for different things. So United States is going to be a laggard because it's going to take time to retool this. Europe is going to be moving actually. It's going to be moving forward. It's going to be very positive growth there. And I believe we're going to see some sort of a cooperation there between some of the Chinese companies and European companies because they really have no other way to do it. And so with that will come some sort of a lowering of tariffs or some kind of a co-branded vehicles. They'll bring them in from China, but co-branded with the European brands, which, by the way, is exactly what Ford's doing. They're going to be cooperating with Renault in the United States to continue some of these other cheaper new energy vehicles. And they still are making them. Like, let's be honest. I mean, Ford is not giving up on this. They're just pivoting, and they're going to go with some battery vehicles, basically the hybrid, and what they call extended range electric vehicles. So you have a little gasoline engine that basically gives you electricity when you need it. And that really soothes the fears of the unions because you have both systems now. You got the internal combustion engine with the electric vehicle. There's lots of service, even though you don't use that gasoline engine too often. It still has to be serviced. So this is good for the service industry. And of course, you can build it on the existing platform. So the shareholders don't have to spend these tens of billions of dollars retooling the way these things are made. But, for some of these guys, unfortunately, I believe the BlackBerry moment has already occurred. And as we recall what Hemingway said a long time ago, how'd you go bankrupt? Well, in the beginning, it was very gradual. In the end, it happened suddenly. This is going to happen. They have to pivot. They have to change. And we look at Europe. You asked me that question, where the action is going to be, because you have the added pressure of Brussels. They're not going to let this go. By 2035, you're going to have to see significant change, which is why from a European Union perspective, you're going to see headlines where there are these partnerships. You're going to have lower tariffs on some of these vehicles. Maybe they're going to have to be co-branded with some of the European brands, but that offering will be there. And when it is, people will buy them, and they're going to be cost-effective vehicles as well.
All right, a few follow-up questions. We're not trying to make a stock pitch here, but which companies do you think, publicly traded vehicle companies, do you think are best positioned to capture the next pivot? In other words, which will be the BlackBerries, which will be the Apples of our time?
Well, I look at, and I've said this in some recent interviews, I'm looking, everyone uses the old Wayne Gretzky analogy, go where the puck's going. I look more like who's going to win the Super Bowl, not this year, but next year, or who's going to win the World Series of Baseball next year. The setup is there for lithium and phosphate. So I believe the CAGR growth rate that we did see in 2024, we can actually look at that. 2025 is now a data point. We're coming in. This industry is going to come in around 1.55 million tons this year, being revised. It should grow by 30% next year, David, which this is because in aggregate, these batteries are being built, and it's not just EVs, it's backup battery systems. And with that, this oversupply that everyone so feared 18 and 24 months ago is gone. That's going to get reconciled this year. But I believe people need to be speculating in DLE, direct lithium extraction. This is the future. This is where big oil and gas has made their bet. And this is where you take the brine water out of a well, often out of abandoned oil well infrastructure, and you get the lithium instantly. There's less energy, 8 to 10 times less water. And my bet is with Lithium Bank, LBNK in Canada. They're doing a feasibility study, which will be complete through the year 2026. The Alberta government is giving them $3.9 million to assist in paying for that in this low lithium price environment. And I believe this is a stock. It's 60 million shares outstanding, going to drive lots of news, should be an outlier. And I also follow the LFP battery because that's where all the action is, lithium iron phosphate. But the P, where's the P going to come from? Purified phosphoric acid, phosphate. This is not going to be like nickel, not going to be like cobalt or manganese where the chemistries change. The P is going to be required. And companies like First Phosphate, PHOS, which has a very unique deposit because it's igneous type rock. And I believe all of that type of material is going to get taken up by the market, and it's not going to be like those other products. So those are two sort of speculations that people can follow.
Are you an investor at Lithium Bank, a director, advisor? Are you
No,
involved
I did start Lithium Bank. I'm a very large investor, so
Yeah.
I'm just like I started Copper Bank before. I do one company every 5 years, so of course I'm very conflicted, but I follow it very carefully,
Right.
very close. And I'm involved with First Phosphate, of course. I know John Passalacqua. I do own shares, so I'm also conflicted there. But everyone is conflicted. I'm following the investments that I think for my own portfolio, but people can follow it through that lens, and I think for the news flow and look where they're going in the future.
Well, you started the company for a reason. What is your future for alternative energy sources for cars? You mentioned the future of energy and what that's going to look like. What is it going to look like?
Well, it's going to be electric. And the reason is it's not going to be hydrogen. We have electricity. Why? Because electricity is already distributed around the world. You can charge an electric car through a wall socket just like you would a kettle. No, that's a stupid way to do it. It's a slow way to do it. But if you're at home and you just plug it in and you only have to replace the kilometers you drive on every single day. So that's all you worry about. And it happens slow, but it's already distributed around the world. But if you just augment that a little bit, you can do it anywhere, and it has to be within your lifestyle. You don't have to be so fixated with that. If you live in an apartment building with no opportunity to charge your car, or you live around an old building in Europe, you would do it through your lifestyle. When you go to the ice skating rink or buy groceries or go to the movie theater, you would then, when you're parking your car for 1 hour or so, while you're doing your daily life chores, that's when you would charge your vehicle. And it works. It's distributed. You can't argue with the tens of millions of people that are doing it. Not for everyone. We already said if you live in Wyoming and you're driving long distances, don't buy one. Probably not the best car for you. But if you're driving 30, 40, 50 miles a day, maybe 100 kilometers a day, it works. But buy the vehicle that suits your lifestyle. And I think that it's going to be electricity. I don't even look at anything else. It's certainly not for the spans of the next 5 or 10 years. It's already decided. You look at all the biggest companies in the world, that's where their focus is.
By the way, I think around 10 years ago, you drove your Tesla around across the country as part of your book, right? Can you tell us about that experience? I don't think I've ever asked you about that. Would you repeat the same experience? Was it fun for you? Did you run into problems? How was it?
Yes, David. So my book was published in February 2016. People can still take a look at it. I think it's still very current. But I basically went from Toronto to PDAC in March of 2016, drove to Boston, down to Florida, zigzagged a little bit in the southern states, through Oklahoma, back down New Mexico, California, and back to Seattle, Washington. I did it the hard way. I visited 100 charging stations, and they are basically set up every 100 miles. And they're right off the freeway. These are the ones when you're going town to town, if you're doing a road trip. And it's seamless. All I can say is people, if they haven't tried it, it works. It just does, and it's only gotten better from there. At the time, they had 300 so-called supercharging stations. And then came Dieselgate. Volkswagen was punished by having to invest $2 billion into charging infrastructure in the United States. Epic fail. It was just miserable. This is one of the reasons you don't have the take-up for the EV in the United States. Thankfully, fortunately, Tesla finally, through 2023 and 2024, has agreed that all the car manufacturers can use their charging infrastructure. And they're all of them, including Mercedes-Benz, are all going to have the adapter that goes with that suits that one charger, which is what we want. Who wants to have 10 different types of interconnectivity, just like with a cell phone? So the experience was very positive. It was almost comical in certain areas where coming from Houston back up to Dallas, I was told, or they tried to trick me and say, we want you to go to that hotel because they don't have any kind of supercharger. And then, of course, I got there and I just plugged it in the wall. I mean, the hotel manager let me park right in front of the thing just to prove a point. And that gave me enough energy that I would be able to go to a supercharger, within 30 or 40 miles and charge the vehicle. It does work, but people buy whatever car they want, and it's all about choice. And to reiterate, people do not buy, particularly in the Asian market, in the Chinese market, they're not buying EVs because they're EVs. They're buying it because it's tech.
Yeah.
Because it's basically, imagine if Apple built a car. That's what Xiaomi and Huawei and all these companies. They're amazingly interconnected. You name the feature, they have it, and it's all from the phone. And young people, and they love buying these cars. Another interesting data point where in the demography of China, when I did my book, 415 million millennials, right? Compared to about less than 100 million in the United States, 75 million, I think it is. But they graduated, David, 100 million university graduates in China. And predominantly, what do they take? STEM fields: science, technology, engineering, and math. They have 100 million engineers they graduated. And this is why they have that talent pool, the ability to make these things, these motivated people, and the rest is history. Lee Iacocca, they had this amazing advertising campaign after he was passed over to be chairman of Ford. He came on in the early 80s to rescue Chrysler at that go-around. And when he finally was retiring in the early 90s, he had one of the most incredible advertising campaigns in the history of the automotive industry. And he was proudly saying, in this industry, you either lead, follow, or get out of the way. And it couldn't be more true today, 30 years later.
And that leads me to my final question, Gianni. So I think 10 years ago, you told interviewers right after you wrote the book that Tesla at the time didn't have much competition, correct? Now, fast forward 9-10 years, there's Chinese companies, there's German companies. How do Western companies, I'm talking about American plus German plus other European nations, how do they compete with China's EV fleet? I'm not talking about domestic sales. I'm talking about domestic plus global exports. How does the West compete with China now?
It's going to be very difficult, David, because you're talking rest of world. We're talking about markets like Thailand, Indonesia,
Yeah.
where they own the market. It's simple as that. How do we do that? You're going to have a product that's at least the same technology and wow factor. You have to have incredible charging infrastructure, which means simple. Imagine if Apple was to do a charging network system, how cool or how simple it would be, But they also have price has to be there. And, Jim Fairley was also talking about their goal in the United States with their cheaper battery vehicles is to have something that can compete with BYD products made in Mexico. That is not going to be easy. We want North America to succeed, but at times we have to sort of cooperate.
Well, let me ask you, is it even possible for American and European cars to get down to the cost level of Chinese cars?
Well, we have to have that infrastructure. We don't have it right now. Everyone's talking a big game. We're going to build this supply network where we can actually have these materials, to be refined into a product that's going to go into a battery of the future. That's being talked about and slowly ramped up. Like, we are making batteries in the United States, David, but the cathode active material is still coming from, guess where? Asia. So if we want to fully integrate that,
yeah,
we are not going to do that next year in 2026. We're not going to do it in 2027. You can do this with partnership.
So it's not as simple as just
the European market's going to be first. I think the European market is forced to cooperate with the Chinese OEMs, and when those two get together, that can be a template, and we'll see how that plays out. But it's happening in real time. And with these, if Brussels is talking serious about 2030 and 2035, they're going to have to push that can down the road or kick it down the road.
Are we going to see a lot more companies like Lithium Bank being bought out by the Teslas and Volkswagens of the world?
I think it's going to be the chemical companies. And when I look at the battery system now, battery companies, the cathode active material, which is a very important acronym that people need to remember. Big oil and gas is already chosen. They're getting into the lithium business because it's a business of the future. And they're doing it vis-a-vis direct lithium extraction. They're not going to be hard rock miners. They're not going to be doing the salars, which is very constrained with all the social issues that everyone should already know about, particularly in Chile. And they've already made their bet. You can't, there's like, you're talking about basically a dozen oil and gas companies. I think companies like Lithium Bank get mated eventually with a big oil and gas company. They're in a great location, Alberta. They're in a very supportive government. They see this as a pillar, a future pillar, an important pillar of their economy. And that's where I think that the future is going. And even Rio Tinto, the company that we know and follow in mining, they reconstituted the company earlier this year to be their famed copper division, their famed iron ore division, and aluminum and lithium. They believe lithium is going to be 15% of their business, and they are heavily relying on, guess what? DLE. Go with the majors. I think that's a major important theme. But for 2026, the takeaways here are the oversupply, which worried so many people in lithium, is gone. It'll be resolved, which means we're going to eventually get into scarcity, which inevitably goes into higher pricing, and you're going to see the positive headlines with DLE. And then with phosphate, I think we're following someone like John Pasalacqua's company, which I do, because the news it's going to drive. One of their partners is Prayon. Who's the largest purified phosphoric acid producer in the world outside of China, David? Prayon, out of Belgium. They've done a deal with them. And the way it's been explained, the offtake is for part of the rock, and they're going to, in exchange, give them the technology to be able to make purified phosphoric acid in Quebec, and they need it because they will take every ton that they can get. Otherwise, it has to come from sedimentary type deposits, and you only get very little purified phosphoric acid from that. The rest of it, that stuff has to be thrown on fields. You get also a bunch of this gypsum slag, which got a bunch of nasties in it. So it will all get taken up. So, and there's very few of those types of deposits. So news flow is important. What else are they going to do?
Yeah, for sure. All right. Thank you very much, Gianni. I appreciate your insights. Where can we follow you?
I'm on Twitter. I'm going to be posting few, things here and there. Not really leaving too much out of Europe. I pretty much keep to myself over here, but I will be maybe at the odd event or two. I used to do a lot of paid public speaking. I spoke for banks and car companies, and when I was doing that around the time of my book, I'm considering doing that again. I get a lot of satisfaction out of being able to hopefully put a theme together in 30 minutes. A little bit different here, Q&A back and forth, but those keynotes are very interesting for me. So maybe I'll be doing some of that through 2026 and 2027. But my Twitter, at Gianni Kov, and should be lots of interesting graphics, quotes, and good links there.
Awesome. We'll put the links down below, so make sure to follow Gianni there. Appreciate it. We'll talk again soon. Take care for now, and Happy New Year to you.
Happy New Year to you as well, David. Thank you so much.